Hi, this is James Shug with Westpac London's end of day report for Friday, October the 28th. No, there's not too much to report today actually after the pretty significant market moving events of the earlier this week. We did have some economic numbers, but nothing too exciting there. In the US we saw a flat core PCE deflator, that's an inflation measure, in the month of September. Not really a surprise though, because we already had the quarterly totals released in the National Accounts or GDP figures, which were published yesterday. But they do show a softening in inflationary pressure at the end of the third quarter. The figures also showed weaker than expected incomes growth in September, although personal spending was up 0.6%, pretty much in line with expectations, mainly related to spending on autos. In the third quarter also, employment costs rose a very subdued 0.3% because of very soft growth in benefits costs. Usually benefits costs run at a faster pace than wages and salaries, but for the first quarter in several years they actually were pretty much flat. And wages and salaries growth also was pretty soft at up just 0.3%. So we're looking at some milder US numbers there. However, we saw an upward revision to the October read on consumer sentiment from the University of Michigan. And that's been a bit of a positive because we've seen some weaker sentiment numbers on a range of indicators in the last month or two. We're still looking at sentiment and confidence, depending which indicator you look at, running at pretty close to the levels that it was running at the depths of the recession just a couple of years ago. So any positive or any move to the upside seems to be well regarded at the moment. In the UK, we saw consumer confidence fall another couple of points. It is at the lowest since February 2009, when of course the UK economy was mired in recession. So that's about it in terms of economic numbers. We had some reports from various firms. One disappointing one in the US was that Whirlpool, the maker of home appliances, they're laying off I think 5,000 workers because of sales weakness and concerns about the economic outlook. And that's consistent with other news we've seen across the Northern Hemisphere this week, with Peugeot Citroën, for example, laying off 5,000 or 6,000 workers in France because of weakness on the auto sales front. So we are getting still this evidence coming through that the major Western economies are struggling on a range of fronts, notwithstanding that pickup in sentiment I mentioned. But the big story, if you can call it that today, was related to an Italian bond auction. What we saw there was the highest 3-year bond yield in 11 years at 4.93%, and some 11-year bonds, 3 billion of them sold at a yield of just over 6%, 6.06%. The true 10-year bond yield in Italy has traded just around 6% today. It's currently just under that. But remember, the equivalent German Bund is yielding just over 2.2%. And that spread between Italy and Germany is approaching the record highs of the Euro era. Markets just don't seem convinced about Italian efforts to cut the budget deficit. And with Greece kind of sorted, at least in the market size for now, the focus seems to be shifting to the northwest. Italy, after Greece, has the highest debt to GDP ratios, and in terms of the actual nominal value, many multiples the amount of debt that Greece has. And I think it's about 1.3 trillion on issue, Italian bonds. 300 billion of that matures before the end of next year. That's a pretty huge financing task that is confronting Italy, and if markets remain nervous as they are today, then it could be that Italy becomes the poster child for the bad boys of sovereigns in Europe rather than Greece. Anyway, that's something to watch going forward. Next week's a very busy week. We've got the Reserve Bank in Australia decision. We're looking for a rate cut there, of course. We've got the Fed. Don't think they'll cut rates, but in the press conference after the meeting, because not cut rates, the Fed's not cutting rates, they're already at zero. I don't think the Fed are going to put in place any fresh policy stimulus at this stage, but Bernanke might allude to it potentially in his press conference, given that his sidekicks of Yellen, Tarullo and Dudley have all kind of made noises about QE3 or similar in the last week or so. The US data has been a bit stronger of late. We don't think that's sustainable. It'll be interesting to see what Bernanke's take on that is. We've also got the European Central Bank meeting. They've got to cut rates. Europe's heading into recession. Let's see if that's a correct forecast. There's only about 6 or 7 out of 50 economists actually expecting a rate cut next week from the ECB, but we're in that camp. And payrolls numbers, the US jobs numbers coming up on Friday. We're looking for a softer payrolls report there, but I'll talk about that more next week. So on to markets, just quickly, we've got the Dow, this is at 4:45 in London. The Dow's unchanged on the day at 12,214. The FTSE in London down 0.3%. We've got the French market down 0.5% and the German market's up 0.1%. In the commodity markets, we're looking at copper prices up 0.2%, gold down 0.2% at $1,744 an ounce, and copper prices, crude oil prices are down 0.9%, looking at $93.12 a barrel. The Aussie's been hovering a bit above, a bit below 107 against the US dollar. That's it for Friday, October the 28th. Speak to you next week.